Hi, Tim Bigham for Delta Derivatives, Option Hedges and Edges, powered by the best option scanning tools on the market today, rbtrader.com. And looking at a market that's waiting on the Fed here, we'll see what happens pre-Fed. I expect this to be the least anticipated Fed meeting, certainly in front of the election, and certainly what's been happening with the FBI. I don't think the Fed has any recourse but basically to obviously not only not raise, but probably not even jawbone going forward. So they should be very agnostic. Expect the market to have a muted reaction, to say the least. We also have Bank of Japan coming out with their rate decision, which that could provide a little more fireworks. Certainly, China came out with some data that fueled the market higher overnight, but we're seeing some selling here as volatility is picking up big time with that email scandal now hinting that Trump, who was basically left for dead a week ago, may have actually a legitimate chance here. So we shall see, but certainly the VIX moving from 13 to 18 has made option selling strategies a lot more attractive here. I still like selling out of the money call spreads regardless of the winner here. I like to position, for example, on the SPY, the 220 level by the 222s as protection. That puts that short strike above the all-time highs and then capping it off for a 2-point kind of risk limiting trade. And also the expiration November 18th, keep it short term. I think we'll see some certainly volatility both pre and post election here. Whether we break out of this trading range we've been talking about, it seems like forever, because it has been. It's going on almost 4 months here, certainly since basically mid-July. We have just flatlined here going forward. S&P's in about a 3% trading range from top to bottom. So at some point we're going to break out here. Earnings actually coming out. We'll probably have earnings growth for the first quarter in the last 7. We'll see revenues kind of be flat here, so stock valuations maybe not quite as extreme, but with those kind of tailwinds that are gone. You know, interest rates I don't think are going to head lower here appreciably in the U.S. I think buybacks certainly are easing here as well. That multiple expansion that really fueled, the move higher here. Stocks earnings have gone down 6 straight quarters. Stocks have been up. That multiple has gone up to almost 18 on a forward basis for 2018 on Goldman's estimates. So stocks are expensive, money's still cheap. Ultimately, I think we'll probably have to have a pullback here to get long-term investors interested on a different front, to be opportunistic using those option scanning tools. GNC came up on the radar. Big call buyers in December. Post earnings, a disaster on earnings. This was a takeover candidate kind of chatter coming out a couple weeks ago. Stock cratered post earnings, but saw a huge call volume come into December. I sold those, went out and bought the Marches, captured what normally is a 6-point term structure vol, ballooned to almost 20. So lean bullishly along with those big call buyers, but looking to capture that IV differential. Another one, big volume on Liberty Media, LBTYI yesterday. Just huge volume out in January. I just jumped in along with the call buyer on this one. Sometimes it's better just to keep it simple. This has been some takeover chatter as well. AMD, another one that's gotten some traction and big call volume as late as well. So I'm a long call buyer there. So until next time, but especially in this market and especially pre-election, keep those stops going. Take care.